I prepared the outline, prepared in English, therefore I talk in English. Today, Vice President Pence visited to Japan after visiting Korea and engaged in bilateral economic dialogue between Vice President Pence and our Deputy Prime Minister Aso. And on this dialogue consists of 3 parts. First one is macroeconomic issue, this including monetary and fiscal policy. Second is infrastructure, energy, cyber, space. And the third is the trade policy framework. So I make my statement regarding the macroeconomic policy and the trade policy framework. On the macroeconomic front, advanced economy faced secular stagnation problem after the global financial crisis. But in the case of Japan, we faced this secular stagnation combined with deflation. We faced this problem already mid-1990s. And the monetary policy faced the zero lower bound on nominal interest rate, cutting the interest rate lower and touched to zero, already more than 20 years. So one of the indicators of this secular stagnation in Japan, I just showed the chart of natural interest rate. Natural interest rate implies neutral real interest rate, which will not accelerate inflation nor decelerate inflation. And the shaded area shows natural interest rate. You see this, our natural interest rate, very close to zero, already mid-1990s. In the euro area, according to some estimate, euro area, a negative 0.4% natural interest rate. United States, very close to zero, although it's positive. This is common feature. The implication, policy implication for this negative interest, natural interest rate, monetary policy has difficulty, must lower the market real interest rate below this natural interest rate in order to overcome deflation. If there is a lower bound, that is 0%, then the inflation expectation must up. Actually, in the first phase of Abenomics, monetary policy adopted, that is quantitative and qualitative monetary easing. This policy adopted doubling the size of monetary base. By doubling the monetary base, it intended to increase the inflation expectation to 2%. If they succeed to raise the inflation expectation 2%, even though nominal rate is zero, real market rate would be negative 2%, therefore much below this natural interest rate. That was the intention of the first phase of Abenomics of monetary policy BOJ adopted. But after implementing, firstly, inflation rate reacted. However, it peaked once, 1.5%. This is the inflation rate. You see this after adoption of Abenomics, starting 2013, April. The inflation rate moved up significantly. But afterward was inflation rate down and coming down below zero again. And therefore, I think BOJ failed to increase the inflation expectation permanently, close to 2%. Inflation expectation now measured this inflation swap rate Currently, our inflation rate, expected inflation rate, about 0.5%. And the BOJ, therefore, now changed the course and adopted the negative interest rate. Negative interest rate, 0.1% on short-term policy rate. And so, after seeing that the inflation rate is below negative, BOJ obliged changing the policy from quantity-based policy to interest rate-based policy. And however, this policy was not successful to raise the inflation rate enough. And then the third phase of monetary policy is the QQE, quantitative qualitative monetary easing, with yield curve control policy. That exactly, this is setting the target on long-term interest rate, 10-year bond, at 0%. Not only short-term policy rate fixed at negative 0.1%, but the long-term rate fixed at 0%. At the same time, in the third phase of Abenomics, the government embarked on the fiscal stimulus. Last fiscal year embarked on 6.5 trillion yen fiscal expansion. The combination of fiscal expansion and zero long-term interest rate implies this is a policy regime shift again. In my view, this is a shift to fiscal theory of price level. And recently, Professor Shims visited Japan, Nobel Prize laureate. He argued why BOJ failed to achieve 2% inflation target, because BOJ forgot about the fiscal policy. In order to overcome inflation, fiscal policy is more important than the monetary policy. And he argues inflation is fiscal phenomena, not the monetary phenomena. He argued in that way. And he recommends the consumption tax rate hike scheduled October 2019, again postponed until the time when the inflation target achieved. That implies fiscal policy should adopt inflation targeting policy instead of monetary policy. Fiscal policy is responsible for the achieving inflation target. So the implication is also postponement of fiscal target. Current government target is 2020 fiscal year, achieve the zero primary budget deficit, but it should be shifted again over the future. So this combination fiscal theory recommends fiscal expansion anyway. Also, monetary policy, a 0% long-term rate, this is also extremely expansionary. Therefore, current Japan's fiscal monetary policy is both expansionary. In contrast, Federal Reserve is moving toward tightening monetary policy. On fiscal policy, there are great uncertainty, quite unpredictable. What is the final outcome of Mr. Trump's fiscal policy? So monetary policy, already 2 times Federal Reserve raised interest rate. Over the future, they will raise again 2 times this year. In addition, there is a possibility Federal Reserve will cut the balance sheet, that diminish the size of quantity as well within this year. That implies rather significant tightening of monetary policy. The difference of monetary policy stance between Japan and the United States creates upward pressure on dollar, downward pressure on yen. Therefore, my recommendation is both Japan and United States government should not rely on the trade measures in order to correct for this exchange rate development. And they should respect the decision-making by central banks in charge of price stability target. This is the first recommendation. And the second one is, if Federal Reserve increasing interest rate, there may be a shock on the financial market and the foreign exchange market. That happened, the tapering shock, which happened 2013, May. Similar shock could arise. In that case, there need international cooperation among Asian economies, including China, Japan, and Korea. Strengthen the, for instance, the Chiang Mai Initiative. This is the pooling of Federal Reserve, $240 billion, and it strengthens the ASEAN way, the international cooperation. This is a very important point. Another point I want to take is the policy, trade policy framework. TPP is the top priority of Abenomics growth strategy. And therefore, but unfortunately, United States withdrew from this TPP. I find even though US withdrawal, Japan should stick to TPP, even though it is becoming TPP -1. I remember the case of GATT, when ITO proposal was made immediately after the war, International Trading Organization. But the US Congress rejected the idea of this ITO, and instead the other countries formed this GATT, and the GATT worked very well to maintain the free trade system. I find a similar thing happens with respect to TPP. Wait for the re-entrance of United States, TPP -1. This is second my recommendation. But another, a regional integration taking place aside from TPP. There is some estimation. If there is a case, United States want to have the bilateral Japan and the United States free trade area, I find we use this opportunity as a plan B. Plan 1 is sticking at TPP -1. But plan B is just implement Japan, US, FTA. And also, this is the calculations. When there is a Japan, US, this free trade area, then you may see this is some significant impact on Japanese economy. And also, if there is a TPP -1, Japan also benefit lower than the TPP 12, but still we can benefit. Of course, compared with the FTA AP, this is I find the final goal. It's including China and other countries, and the benefit is the largest. So that concludes my remark.
Thank you, Dr.